Hi, good afternoon, friends. My name is Rahul Randeria, and I would be conducting today's show. Today, we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns in Nifty, Bank Nifty, as well as the different asset classes. Now, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that though the markets were overbought, we might see some sort of profit booking at the higher levels, and the profit booking cannot be ruled out. But the strategy was that if there is 1% of or 1.5% correction, the strategy should be buy on dips. Market did came down, but we didn't see any sign of pullback or any recovery from those levels. But in fact, what we have seen that continuously market kept correcting because of the global cues, and market ended on a negative note. So now let us see what we have observed in Nifty on the Nifty daily charts. So let us start that index analysis. See here on the Nifty daily charts, as we have been mentioning that it has corrected from its intermediate high of almost 18,350 odd marks, and last 4 consecutive days we have seen the Nifty has been correcting in a very drastical manner. Now let us see what we can expect in the next week on the daily charts. So let me put this Fibonacci retracement on the Nifty. This is the Fibonacci retracement. The rally started from this low, and it ended somewhat around here. So 18,350 odd mark. Now you can clearly see this is the area which is a 50% retracement of this whole rally from here. Now this is 0.38% retracement of this rally. Now Nifty has just managed to close above those particular retracement mark. Now let us see what Nifty has made or Nifty has formed on the daily charts. This Friday's candle is a high wave candle. Now this similar kind of formation was made here on 30th December. You can clearly see a high wave candle, and then we have seen a rally. See here also on 7th January, two high wave candles, then a rally. Here also you can see on 21st December, it was a high wave candle, and we have seen a sharp rally. So now the question mark is what from now? Now last 4 trading sessions, from top a drop, here a drop, here a drop of similar intensity. Now here is a high wave candle. In the past, in the last 1.5 month or in the last 1 month, we have seen 3 times Nifty making a high wave candle, and then we have seen a sharp rally. So now again many things are combining at these levels. Nifty has rallied, then it has taken a 38% retracement of this particular rally from 16,400 to 18,350 mark. It has taken a correction of 38% retracement. It has just closed above that. Again high wave candle. So now the probability that Nifty might bottom out from these levels, but one cannot forget that next week is a monthly expiry. So it we might see a zigzag movement or a high volatility from Monday to Thursday because of the monthly expiry, and most of the time would be seen or spent into rolling over of the position from the current month expiry. I mean to say from January month expiry to February month. And one should also note that on 1st February we have a union budget, so it is going to be a highly volatile trading sessions for at least for the next week. So try to trade with strict stop losses. Now again, I just wanted to share one more chart, which is Dow Jones. This is Dow Jones Industrial chart. Now Dow Jones also have corrected since last 1, 2, 3, 4, 5, 6 trading sessions. So also the global markets are also into deep oversold territory. On Monday we have FOMC meeting, we have a Fed meeting, so we might see some sort of clarification regarding what they are going to do because of the inflationary pressure. Either Fed might raise interest rate, or they might think of raising the interest rate, or they might do a quantitative tightening. So this is the reason because of we have seen the global market sell-off in the last 4 to 5 trading sessions. So as a global view, the view is that across the globe, the markets are into oversold territory. A pullback or a bounce back rally cannot be ruled out, or the bounce back rally can be into a form of short covering. So definitely one needs to be cautious. And in domestic markets, as I said, that it is a monthly expiry, so most of the trading session would move in this way from Monday to Thursday. So try to trade with strict stop losses. Now let us discuss the important supports and resistance in Nifty for the next week. The important support in the Nifty for the next week are placed at 17,485. This is the first support. The second support is placed at 17,383, and the third support is placed at 17,238. Whereas on the upside, the first resistance is placed at 17,777. Second resistance is placed at 17,943, and third resistance is placed at 18,018. And the overall strategy should be buy on dips. Now let us discuss what we have observed in Bank Nifty. In Bank Nifty, on the daily charts, I will show you the formation of the Bank Nifty. You can clearly see this is the upward rising wedge where the Bank Nifty is just above its support trend line. Again, on the Bank Nifty also I will show you. I will just let me zoom the chart. Again, you can see Bank Nifty has formed a high wave candle. Here was also a high wave candle, then a rally of 3 days. Here it was a high wave candle, then it was a rally. Here it was inside day, and a couple of, here was a high wave candle. It consolidated and saw the breakout. So now again, upward rising wedge. It is just trading just above its support trend line and a high wave candle. So here again we are expecting that Bank Nifty might consolidate from these levels, and then we might see a rally from the lower levels. So again the strategy should be buy on dips. Now let us discuss what the important supports and resistance in the Bank Nifty. The important support in the Bank Nifty is placed at 37,437. This is the first support. Second support in the Bank Nifty is placed at 37,224, and the third support is placed at 36,756. Whereas on the upside, the first resistance is placed at 37,741. Second resistance is at 38,038, and the third and the final resistance in the Bank Nifty is placed at 38,469. So these are the important supports and resistance in the Bank Nifty. And as I said, because of the monthly expiry, even I am expecting a Bank Nifty moving in this zigzag way. Either it can go in upward trajectory, or it can move in this particular way. So it is going to be a highly volatile trading session. It is going to be difficult for traders to trade in this particular monthly expiry days. So try to trade for small moves, maybe 0.5% in Nifty and Bank Nifty. So strategy would be buy on dips at the lower levels. Now let us come to the third segment of our show, which is option analysis. In option analysis, we will try to identify where the particular action has been seen in the calls and puts in Nifty and Bank Nifty. So now let us discuss what we have observed in Nifty calls. In Nifty calls, you will see on the screen that the action was seen in 17,800 calls, then 17,900 calls, then 18,000 calls, and 18,200 calls. Now here you can clearly see there has been a significant rise in the open interest. There has been a sharp fall in the option premium. Implied volatility is just between 14 and 15.5. It is just into a comfort zone. But looking at the last 4 days of selling pressure, there has been a strong out of the money call writing seen in these particular strike prices. So because of this particular fall, maybe a bounce back could be either minor, or we might see selling pressure coming in again at the higher levels. But as I said, Nifty might consolidate, and then after a consolidation, maybe till expiry, and then we might see a rally. So the strategy should be buy on dips. Now let us discuss what we have seen in Nifty puts. In Nifty puts, the action was seen in 17,600 puts, then 17,500 puts, then 17,400 puts, and then 17,300 puts. Now here you can see there has been a rise in the open interest. Implied volatility is slowly and gradually rising. It is between 14 and 17.74. 15 and 17.74. Here you can see there has been a rise in the Nifty puts. I mean to say the option premiums. So definitely, because of this particular fall, the smart money might have bought Nifty puts at the lower levels. I mean to say the out of the money strike prices. So still they might be thinking that a further cool off cannot be ruled out. But technically speaking, as I said, that it is a high wave candle. So technically the probability of a sharp from these levels, I'm not denying that 1% fall cannot be ruled out. I'm not denying that a 1% fall from here cannot come. It can come, but at lower level support might also come in the Nifty. So try to just play out for this particular small moves, because of the monthly expiry we might see a zigzag movement. So trade with strict stop losses and try to trade in small moves. Now let us discuss what we have observed in Bank Nifty calls. In Bank Nifty calls, you will see on the screen the action was seen in 38,000 calls, then 38,200 calls, then 38,500 calls, and 38,700 calls. Now here you can see there has been a significant drop in this particular option premiums. The implied volatility is shooting up. It is just between 20.5 to 21.5. So here you can clearly see there has been a strong writing seen in this Bank Nifty call options of out of the money strike prices. Now because of this shooting up of implied volatility, as I said, a sharp pullback cannot be ruled out. So a pullback can come. It might be in a short covering manner, but it cannot be significantly higher. Maybe I am not expecting a 1,000-point rally or 1,200-point rally in Bank Nifty from these levels in the next 2 or 3 days. But definitely a 500-point or 700-point bounce back cannot be ruled out. So just try to trade with strict stop losses. Try to buy at the lower levels. Because of this high implied volatility, a short covering cannot be ruled out in Bank Nifty. So now let us discuss what we have seen in Bank Nifty puts. In Bank Nifty puts, the action was seen in 37,300 puts, then 37,000 puts, then 36,800 puts, and 36,500 puts. Now here you can see there has been a rise in the open interest. Again, there has been rise, not a significant rise, but a nominal rise in the premium of this Bank Nifty puts. The implied volatility again here is on the higher side. The implied volatility input is also on the higher side. It is just between 18.5 to 21.5. So here also, as I said, both in Bank Nifty calls and puts, the implied volatility are shooting up. So as I said, a sharp short covering cannot be ruled out, and at the lower levels we might see profit booking coming in Nifty puts. So definitely just traders need to follow the trend, need to identify the exhaustion in the downfall or in the further cool off, and from there we might see a short covering coming. So looking at the chart patterns, option action in the option analysis in calls and puts in Nifty and Bank Nifty, the price volume action, the price setup action in Nifty and Bank Nifty daily charts, a short covering cannot be ruled out. But as I said, the strategy should be buy on dips, and because of monthly expiry we might see a zigzag movement till Thursday. So try to trade for small moves, either long or short, but I would recommend try to go long at the lower levels and play for small moves. So now let us come to the final segment of our show, which is the positional call. In positional call, I have identified one stock. The name of the stock is WIPRO. So this is the support area. Previously it was resistance. Then once we have seen a breakout, then we have seen that the stock has rallied from here to here. Then again it came back to these levels, again rallied from here to there. Similarly, it is coming to these levels. The rally started from these levels in WIPRO. The rally started from the levels of 522. It extended till 740. Now look at this, the retracement mark. It has already corrected 61% of this rally. Now again, as I said, 61% retracement is a very strong area from where there is a potential of stock to see a pullback rally from these levels. Now again, I would like to add one more. Let me just delete this retracement mark and add another this thing. You can see it has the Bollinger Band has expanded. It has taken multiple support from here. So now the probability is that the stock is into oversold territory and we might see a pullback maybe from this area. This is the area from where we might see a consolidation coming, and then stock might rally towards it, at least to this resistance area of 666. Strategy would be buy WIPRO in the range of 605 till 588, and for next 5 to 6 months we have a target of 666. So the long-term investors can also accumulate WIPRO in this particular range for investment period of at least 5 to 6 months. We might see a pullback rally. A momentum trader can also buy in this particular range for an upside target of 630 in next maybe 1 or 2 months. So the stock is looking good for long-term investment also and for swing trading also. So thank you very much, friends, for watching the show. Today it was little bit long. I have taken little long, 4-5 minutes more, but the data needs to be analyzed deeply. So sorry for that, and have a nice trading week. Thank you.